Welcome to the What to Watch video update, where each week I do a lot of different videos. I do a video each day. I do a number of different weekly videos. Well, the last video that I do over the weekend is I pick out the charts, both positive and negative, that really seem to be saying something right now. And then I list them and we go through them. Now, it's not a black and white positive and negative. We can look at some positive charts, but they might be giving us some warning signs. There might be some negative charts that are giving us some encouragement, and I put them together in this video. Now, if you want to get updates of what charts I go through in this particular video, please watch the daily video updates. This is just a video that I do once a week. And when I first started doing this, I thought it was going to be on an as needed basis. I would update it. Well, it just kind of stayed as a weekly video. This is being prepared for Monday, September 23rd. So please be aware that I have a thing called the SPX investing program. I had a really good week last week, by the way, with some of the strategies that are taught in the program. If you want to learn more about that, it's free right now. It'll probably be free for at least a little while longer. I'm also thinking of doing a live class. There's a posted class there called the basic course. I'm thinking of doing more of a pared down version of that, where you actually attend the class instead of me just pre-recording it. There's a link below this video, and every video that I post that'll take you to the website, or there's a link that'll take you to a video that'll talk more about the program. If you have any questions, here's an email address and you can contact me. And as I said, the daily video is the real foundation of the analysis and commentary that I do. I know my videos are longer. I know I do a lot of videos. That's what it takes to really understand what's going on in the market. You can't just do this by a short little video with a few little charts. And so even though the daily videos are longer, I try to break them down to make them somewhat manageable by doing all of these other weekly videos as well. Okay, let's go through and look at some positive things. Now, we set an all-time high this week with the S&P 500, and that's always a positive thing. We just have to know, are we going to set another new all-time high after this? Or are we done setting new all-time highs for a while? This is the 10-minute chart that I follow while the market is open. We go back to Monday. We were pretty flat. We did have a gap higher open, but then came down on Tuesday. Then this is when the Fed met and things were pretty quiet. And then here's the gyration from the Fed. And then we ended up closing lower on that day. But then as the world markets got a chance to react to what was going on, a 50 basis point cut, the futures just went berserk. And so we had a higher open, much, much higher. And we were able to set the all-time intraday high and an all-time closing high on Thursday. Then on Friday, it was quadruple witching. Some people call it triple witching. We had all these options that were getting ready to expire, and people had to do something with that. We saw a massive increase in volume, and we actually ended up closing down a little bit on Friday. Okay, now, as far as sentiment, for right now, we're positive since we're above 50 and going up. So we tend to go with that. As we're going up, we tend to be more positive. If we're going down, we're more negative. It's when we get above 75 or below 25, that's when we look at things starting to reverse. Then we're keeping an eye on the trend. And this is one of my main charts that I look at. The indicator is called the ADX, and it's above the moving average. So now we have a trend. But we don't have a confirmed trend. It won't be an actual trend until this climbs above 20. We also see the green line is on top, even though it declined a bit on Friday, and the red line's underneath. So this is a non-confirmed positive trend in the short term. And we're seeing that as well here. We're a little bit further below 20 right now. We're just trying to come above the moving average. But we also have a non-confirmed intermediate term positive trend. Then this is the condition of the 20-period moving average. We're above both lines. Even though we came down on Friday, the lines are still going up. So that's positive. And we're above both the simple and exponential 20-period moving average. That's also positive. And here's the condition of the 50-period moving average. This is intermediate term. We're above both lines, and the red line is starting to cross above the blue line. If it can continue to do that, that would be even more positive, because this red moving average moves faster, and it just shows there's more strength behind the move. And we keep an eye on the VIX. We did decline a little bit on Friday. We're coming down into a range that tends to be more favorable for stocks to go up. The line chart is the closing value. The bar chart is the intraday swing from high to low. And then we also look at the VIX of the VIX. It just measures how fast is the VIX itself actually moving. When the VIX goes down, this tends to go down as well, and that's what we're seeing. And then this is some research done by Tom Bowley, who's connected with earningsbeats.com and stockcharts.com, where he came up with these annualized numbers here. And when we're down around the range that we're in right now, we closed at 16.15 on Friday. We see the annualized returns almost at 31%. Now, it would get even more positive if the VIX would drop, and that would mean stocks are going up. What we're going to be watching for, if we see a decline, if the VIX starts to go above 20, that's when we see negative annualized returns. And for right now, anyway, the momentum of the VIX is down as measured by the MACD. This is something that I haven't seen in a long time here. This is the skew index, which is closely related to the VIX. Where the VIX uses at the money options to calculate, this uses out of the money options to calculate. You can see we're getting as high a reading as we can get with this indicator. And that means the market is expecting some kind of a move. Now, even when we were going up, this kept going up as well. Does that mean the move could be to the downside? It could be, but we don't know that for sure yet. We're not seeing an awful lot of negative confirmation now, but the market is expecting something. We look at the risk on versus risk off. Typically, when this is going up, stocks are more risk on. That's favorable for stocks. When this is coming down, they're more risk off. That's negative for stocks, and it's going up right now. We're looking pretty good here with the advanced decline line for the S&P. Down a little bit on Friday, but well above the moving average, and the moving averages are going up. Also looking good with this other internal measure. This measures the new highs minus the new lows. The 5 period and the 10 period are both going up. Then we look at accumulation distribution, which I call a smart money indicator, and we're above an advancing moving average. That's positive. Now, what I try to do, and it's not quite pure with this calculation, is I use a thing called the boom indicator. When we get too far away from this moving average, we get up into this red area here. And we're just a little bit above that right now. So that could be a bit of a concern. But at the same time, this chart was giving us a little bit of a concern because when we had the big up day on Thursday, this actually went down. Well, in Friday's session, this went up, even though the S&P went down. We keep an eye on the advanced decline ratio in the short and intermediate term. We are positive here. And this was another thing that was causing a concern almost for the last week, where we were going up with the S&P, but this chicken money flow, another smart money indicator, was actually going down, and the red line was turning down as well. Now, we did bounce back up on Friday. So we're still positive since it's green. But if this continues to go down, that would be another warning sign to us. Another smart money indicator is the Chaikin oscillator. It had been declining even though we were going up, but it actually went up on Friday. The vortex is another primary indicator. We have the green line above the red line. That's positive. We would like to see the green line going up stronger than it is, but at least it's positive. Here is a short-term rainbow going from 10 periods to 50 periods, showing that we're above all the lines here that are plotted, and we are positive with the short-term trend. Here's an intermediate term rainbow going from 50 periods to 100 periods. We're also looking solid there and positive. Here's a long-term rainbow chart going from 50 periods up to 250 periods. We're positive there. And we look at the broader market. Now, we look at the S&P, but then we also look at the NYSE and other indexes as well, where on Friday we came down with the cumulative advanced decline line. But what's really more encouraging, because this is calculated in a different way, is a regular NYSE advanced decline line. And this was down a little bit on Friday, but it's really been showing some good strength lately. We also look at the new highs and new lows for the NYSE. This is a daily score, and we're positive, so that's good. This red line going through here is a 50-period moving average, and that's more intermediate to long-term positive. Here's another NYSE advanced decline line coming down a little bit on Friday, but still looking really strong. And this is calculated in a slightly different way than the previous NYSE advanced decline line I just showed. And we break this out based on common stock on price, coming down a little bit, but looking pretty strong. Coming down a little bit based on volume, but still looking pretty strong for the time being. We look at the advanced decline line across different indexes with the NYSE common stock, S&P mid caps and small caps. Even though we declined on Friday, we're still above an advancing moving average with each index. Now, this is another concern. The S&P McClellan oscillator. When we're above zero, that's positive. If we drop down below zero, that's negative. So we just want to see, is that going to end up dropping down here? You could say this is a bit of a negative divergence since we've been going up with the S&P as the McClellan oscillator has actually been going down. So when we're above zero, though, the next chart, the summation index, is positive based on price. We're kind of slowing down a little bit, but we're still going up, both based on price and volume. What we'll be watching for is any negative divergence, because sometimes volume will turn down ahead of price. We're not seeing that yet, but we'll be watching for that. Then we're also declining, but still positive with the NYSE McClellan oscillator. So we have the S&P McClellan oscillator, and here's a broader market measure based on the NYSE. It's still above zero, even though it declined on Friday. We're still going up with the summation index for the NYSE based on price and volume. Now, this is positive with the Swenlin trading oscillator, but you see how we're going down? And we were actually going down even when we had the big up day on Thursday. That's a little bit of a concern. We're going to be watching this. This is not a primary indicator that I use. It's right in between a primary and a secondary indicator. But we're positive when we look at the parabolic SAR. This is another primary indicator that I use. The dots are underneath, so we are positive. Momentum is switched back to positive on the daily charts in the short, intermediate, and long term. And that's a positive thing. Now, we look at a ratio between stocks and bonds. When this is going down, that means stocks are outperforming and bonds are underperforming. Then, right at the end of July, going into early August, we really spiked up, came back down. Then we were going up. Now we're coming back down. It's more positive for stocks right now if this ratio were to continue to decline. If we do turn negative with the S&P, it's likely that this ratio will start to go back up. And we're well above the 50-period moving average right now. And I really haven't been talking about that, but since we're above it, that's positive. We're above all of the moving averages that are plotted here. So on a trending basis, we're looking pretty positive. We're looking really good here, maybe a little too good with the bullish percent index. We're getting quite a high reading. When we get above 70, that's when we get warned about this. And if we top out and start to come down, that could be more negative for the S&P. We're also going up and possibly getting near an extreme reading with the NYSE bullish percent index. And we're right on the border with the NASDAQ 100 bullish percent index. So we're seeing a lot of this coming together right now. Still positive, but we just want to watch this to see if it ends up turning negative. We look at the stocks in the S&P 500 above their 20-period moving averages. Even though we declined, we're still above 50. And we declined, but above 50 with those stocks above their 50-day moving average. The 100 moving average, after almost getting extreme, came down a little bit on Friday. And we came down a little bit with the stocks above their 200-day moving average, but we're still well above 50. So we're looking positive across the board there. Then we look at the cumulative advanced decline line based on price for the S&P. Still looking pretty solid when we break it out based on price, and declined a little bit here, but we're still looking solid based on volume for right now. And we want to keep an eye on discretionary. We look at mainly the ratio on the bottom. We want this to go up. Now, it's been improving, but we want it to go up even more. That would help the indexes to go higher. Tesla is included in here. If Tesla does well, then this ratio will continue to go up. If Tesla gets into some problems, then this ratio really struggles. The NASDAQ 100 above its 50-day moving average. That's positive. The NASDAQ itself is above its 50-day moving average. The momentum for the NASDAQ 100 is positive. Small caps, they really had a good week, but we've seen this shoot up, give back many times in 2024. They were down over 1% on Friday after really going up solid, but they haven't broken out above these previous levels yet. The Wilshire on Thursday set an all-time high. This is a broad market measure that we look at. Also setting an all-time high on, well, close to it, is the financial sector. That's looking solid, and we want to keep an eye on that, because if this starts to fall apart, it's like, okay, is this 2007 again, where everything was looking great, and then we went into 2008 where everything fell apart? We just want to watch this. The FANG index is above its 50-day moving average, but we're a little concerned because we spent a lot of time below it, below the 50-day moving average, and so the blue line is actually starting to go down. The longer we can stay above this, the more it will turn the moving average back up. Then total stocks coming off of setting a recent all-time high on Thursday. This is about as broad as it gets for the different ETFs that we follow. And we look at a ratio between the Qs, which is the NASDAQ 100, and small caps coming right up to about this blue line here. Not really showing any weakness, at least yet. The NASDAQ 100 to Dow. The Dow set an all-time high. The NASDAQ's been lagging behind, but we're still holding up quite well with this ratio around this red line. Then we look at a broad market measure with short-term bonds. We're coming up out of the rainbow. That's showing a lot of improvement. Another broad market measure going a little further out with 3 to 7 year bonds coming up out of the rainbow. The NASDAQ weekly chart, we're above this long-term trend line going back to 2009. And for the most part, now we've been up a little bit with the bond yield based on the 10-year, but this has been coming down pretty fast right now, and we're in a downtrend. Now, if we start to go back up, that'll turn this chart negative. But for right now, we've just seen a couple of up days after really going down pretty fierce. And then we look at 1 to 3 month T-bills, which is cash, and compare them to 3 to 7 year bonds. We want to know what is the context of why this is happening. Ideally, we want this ratio to go down. Now, that means that what the market is anticipating currently is that we're going to have a soft landing. The economy is not falling apart. The Fed didn't come in and cut rates because they see something that we don't see. And maybe they do. But for right now, we're dealing with this soft landing scenario. If things start to change, if some black swan event happens, if something flying out of left field hits the markets and hits the U.S. economy, this going down would be negative, or this may end up going back up. But for right now, the context of this going down tends to be positive for stocks. And we're going back up a little bit here, but we want to know the context between the 1 to 3 year bonds and the 3 to 7 year bonds. For the most part, they've been heading lower, and that's more positive for stocks. And then this is what I'm talking about with the soft landing, and I didn't adjust this box here. We're coming up outside of the top end of the rainbow. This is just meaning that the market is anticipating a soft landing. We look at home construction. They love the interest rates being cut. They've been rising in anticipation of that, even though they fell down a bit on Friday, well above this rainbow. We look at growth to value ratios, seeing a little bit of an improvement with the Qs to S&P. Actually, discretionary to the S&P is looking pretty good. They're above an advancing moving average. And we turned up a little bit when we compare large cap growth with large cap value. And so we're seeing a bit of improvement here with the large caps, mid caps, and the small caps are pretty much right on top of their moving average. This is a ratio that I follow very closely, S&P growth to value. When the S&P tends to go up, this ratio is going up at the same time. We are improving, but we want to see even more follow through here. And we look at a 5-period moving average of the highs and the lows across the Amex, NASDAQ, and NYSE. We're getting a positive score here. That's just showing broad market strength right now. And we also see a ZWAG NYSE breadth thrust. Now, we didn't get the first part of the signal. The ideal signal is when we come down and drop below 0.4, and then within 10 trading days, just go all the way up above this red line. That's not, so we don't have a signal here. So this is not an actual official signal. But the fact that we're above this red line just shows that, yeah, we're looking pretty positive right now across the broader market. Now we're coming down with the 2-year yield. Now, typically that would be positive for the S&P, but what is the context? Right now, the context seems okay, but we're watching this to see if something else might be developing. And then this is a weekly chart of the S&P. We're well above this R2 pivot level. So that's positive there. Large cap growth is above all the moving averages. So that's hanging in there pretty well. We do another ratio of semiconductors to the Dow. We are dropping a little bit. We've been seeing a bit of weakness or a lack of strength in the semiconductors lately, where the Dow is setting an all-time high. So we want to watch this. We would like this to go back up to the blue line to be positive. If this continues to fall, that could be negative for the market. Now we look at some negative charts, and there's not very many here. This is a ratio of the tech sector to 3 to 7 year bonds. We're not up out of the rainbow yet. Tech is not necessarily leading things higher right now. So we want to just watch that closely. We look at the QQQs to 3 to 7 year bonds coming up and improving, but we haven't broken out of the rainbow yet. And then we look at TIPS, which are Treasury inflation protected securities, and compare them to 3 to 7 year bonds. Going down, this is what we want, but we're going back up now. Is this a warning sign that we're seeing? Not quite sure what this means, because usually this goes up when the market's worried about inflation and interest rates going up. Well, they just cut interest rates, and inflation has been coming down. Why is this going back up? Is this some kind of a warning sign that we need to pay attention to? And then there's this thing called the Hindenburg Omen. Now, most of the I shouldn't say that. The perma bears that I listen to, they just treat one little signal out of this as though it's real. Well, the real definition of this is it needs to have a confirmation. You get a first signal and then you get a second signal within a period of time. Well, we're seeing that now. We got the first signal on September 5th, and then there has to be another spike up here that has to happen within 20 trading days, so roughly a month after the first signal. This could be a concern. Now, if this comes up and creates even more spikes, that will even confirm things, because the last time something like this happened, this was right before the COVID crash, and this was right before we went into 2022. Now, we use other charts. We're not seeing really anything all that negative right now. The perma bears have already declared that the stock market is finished, but we want to wait to actually see how this develops. We're not seeing a lot of things right now other than some warning signs, but this could happen. And so we just want to respect this, pay attention to it, realize it's there, and then we'll just evaluate things on a day-by-day basis and see if we're turning more negative or if we still continue to stay positive. Thank you. I really hope you found this helpful. Have a really good weekend, and I will talk to you in the next video.